Hello, everyone. We're going to give it a couple of seconds here, or maybe a few minutes for people to start rolling in. I just want to check that we're on live, all platform. So let's see. Let's give it like a minute or two here. So I think we're on. So we're on YouTube. Let's see if we're on Facebook. We're on LinkedIn. There you go. Perfect.
Wow. We got all our people on.
Okay, let's check out Facebook. So we are on Facebook. Let's see if we're on the Facebook Rise group. And then we can get started from there. Oh, go live here. Hey guys, thank you so much for tuning in. Just give us a quick minute here, just checking if we're actually on live in all the platforms before we get rocking and rolling. I think we should be good to go here. Streaming software. Oh. Okay. Let's oh, sorry guys, one more minute. This is Facebook has changed some settings here, so I'm just trying to figure it out. Oh, there you go. Perfect.
We'll get it.
Go live. There you go. There you go. Okay, so we are live in all platforms, I believe. So I think we're ready to rock and roll. Thank you guys so much for joining us today. This is our monthly live Ask Me Anything. For those who are unfamiliar what this is all about, I bring on an expert guest where we dive down into a specific niche topic. In this month's live Q&A, we're going to be talking with Sammy Tillo all about insurance. He's a multifamily investor, a good friend of mine, and an insurance expert. So if you have any questions around infinite banking, around residential investing insurance, around commercial investing insurance, then he's your go-to guy. Sam, thank you so much for joining today.
Thanks, Austin. Excited to be here.
Awesome. So without further ado, why don't we just kick it off with some basic questions? And guys, by the way, if you have any questions, drop them down in the comments, and we'll try our best to get to them. So we'll get started with just in general, very basic question. What is an insurance agent and why should we bother using one? Because I remember with my first investment property, I think I was just trying to quote things out myself. I didn't understand what an insurance agent's role was. So why don't you give some people some insight into that?
Yeah, absolutely. So, well, thanks for having me on anyways, Austin. And I'm really excited to bring you guys some value with insurance and the importance of having the right insurance and all the things to look out for. So I'm looking forward to answering all your questions. So pretty much, So I'm Sam Castillo, and I'm an insurance agent. So pretty much what an agent is. There's two terms. There's usually, you talk about agents and you hear about brokers, and what's the difference, right? So an agent is exclusive to one company. So I'm exclusive to one company, and I work for one company, and I offer insurance policies through one company. Now, a broker will have a multitude of options. That's pretty much the biggest difference when you're looking at, insurance agent, insurance broker, and there's pros and cons to both, and I'm looking forward to getting into that a little bit as well.
Yeah, why don't we go over some of the highlights, the pros of using an insurance agent slash so the insurance agent. What's some pros of using one, and why do you think people should use one instead of going and sort of quoting things out themselves?
Yeah, I mean, a lot of times when you use an agent, they will know that one company very, very well. So they'll know the ins and outs of the policies and the coverages and how they can accommodate a client. So there's definitely a lot more time to be able to focus on one company. And of course, sometimes we're kind of, we focus on certain types of businesses. So we'll be very, very good at one thing. And sometimes, we might not offer certain services for certain clients. So we're a little bit more restricted, but also, for me, I like to focus on, not so many different types of commercial, let's say commercial policies, or I could focus on one type of client, as opposed to being a broker. It could be a little bit confusing and hard to get to know your products a little bit more. I think because there's so many different options.
Right. Awesome. So we have a question down here, a very general question. But what is property insurance? Maybe from the perspective of a home buyer and from a real estate investor.
Yeah, so property insurance, we call it fire insurance in the industry. So pretty much anything that can be lit on fire. Property insurance can go from an insurance on a building to insurance on contents. So pretty much property insurance, again, building all the way to contents and uh, and stock in a building.
Perfect. And sort of diving deeper into that, in insurance, there's like obviously these sort of technical terminologies not everyone's familiar with. Common ones are premium, deductibles, and coverages. Would you be able to touch on what each one is on a high level for those who might not understand?
Yeah, so premiums is pretty much what you're paying annually or semi-annually for your insurance. So your premiums are definitely something that you want to keep an eye on, especially if you're an investor. Your net income is extremely important when it comes to refinancing. So keeping an eye on your premiums. If you see any significant jumps from year to year, it's definitely important to make sure you're keeping tabs on your premiums, just to make sure that when it comes to refinancing and keeping your tight knit net operating income, that you're keeping an eye on that annual premium. So we, as insurers, we send out your renewal minimum a month out prior to your renewal. So you have some time to kind of review, make any changes, and also gives you some time to shop around. So 1 month prior to your renewal, you should be taking a peek and making sure that you don't get any sticker surprises when that renewal comes up. So that's all. That's for the premiums. Now for deductibles. So deductibles, pretty much how I describe it to clients is if a claim were to happen, it's the first amount. So say if your deductible is 1,000, it's you pay the first $1,000 as your deductible, and we pay the rest. So sometimes your deductible on different types of coverages may vary as well. So you might have, I don't know, $1,000 on the building, and then you might have 2,500 on the contents. So you want to make sure that you're kind of keeping a tab on that as well, because you might have different deductibles on different coverages as well. So making sure that if your deductible is manageable too, you don't want to have a deductible that's too high, just to keep your premiums lower, because if a loss does happen, you do have to pay that portion out of pocket, right? So again, you pay your deductible first, and then the insurance company pays the rest or the difference.
Gotcha. And what are coverages? And is there any example of popular coverages that real estate investors should consider? Or I wouldn't say popular coverages, but coverages investors should
Yeah.
consider.
Yeah, so there's so many types of different coverages out there. But when I'm thinking about like a rental property, I'm thinking about rental income, right? So one of our biggest pieces of our businesses is, especially when you own a building, is your income, your rent, right? So that's a huge part of your policy that you should be looking into, just making sure that you have sufficient coverage and you understand how it works. If a fire were to happen and you have to rebuild, what kind of coverage do I have for that rent that I'm missing out on, right?
Mm-hmm.
And how long does that coverage last? So there's sometimes no coverage on policies I've seen. I've seen coverages that cover you for 12 months, 18 months, 24 months. So there's different types of levels of coverage as well. So you want to make sure that you have income replacement or rental value coverage in case a fire happens and you're not getting any rent. So you want to make sure that you have insurance
Mm-hmm.
for that rental coverage, if something were to happen. So each policy is going to be different. When I look at that, I always try to give them the best and longest amount of coverage, because right now, especially coming out of the pandemic, right, it took so much longer to build things.
Mm-hmm.
So, if you only have 12 months, the likelihood of you rebuilding an apartment building in 12 months, I mean, good luck with that, right? So, definitely reviewing your coverage to make sure you have rental coverage. And because you'll be surprised of how many people don't have that.
Right, right. Awesome. We're going to dive into this a bit more, but we did get a question, and I want to make sure that we answer it just in case, as this person is still probably on.
Yeah.
What type of insurance is best for covering both rental properties and a primary residence? And how do I navigate insurance when adding a property to my portfolio?
Okay, so what kind of coverage is best for coverage for rental? So I would say you want to make sure your liability coverage is sufficient. So typically you see $2 million liability. As you start to gather and grow your portfolio, I would say you want to have either an umbrella policy that covers you for liability up to 5 million. So you want to make sure your liability coverage is sufficient, especially as you have more units, more chances for slip and falls. You're more open to liability as you grow your portfolio. So making sure you have sufficient liability coverage when you have rentals. And again, that rental coverage. So make sure that if something happens, a fire, a storm, and you're not getting rental income, that you have insurance coverage for that. So those are two things that I'd 100% make sure that you have on your policies. And as you grow your portfolio of liability, let me see what else he has in here. And also, how do I navigate insurance when adding a property to my portfolio? So for sure, when you're adding properties to your portfolio, and this is so important, do not use their insurance premiums when you're doing your financing. One of the biggest pitfalls when it comes to insurance when you're buying a property is like you're buying an apartment building, let's say, and you're using his or her old policy premiums. They've had their policy in effect for 15, 20 years, and it hasn't been reviewed in that long, and then you're using that for your numbers when you're starting to see if it's worth putting an offer in. Make sure that you have a conversation with your insurance professional to say, hey, what's an actual accurate amount for me to get insurance on this building?
Mm-hmm.
Do not use their insurance premium. It may throw you offside on your financing, and who knows, you might run into issues about even insuring the property. Maybe they have galvanized steel. Maybe they have water issues in the area. Make sure that you're just reaching out and getting kind of a lowdown on what things to look out for from your insurance professional for sure. But again, don't use their insurance premium that they have already. Call your insurance professional that you trust, and see if they can give you some advice on that particular property.
Awesome. And
Yeah.
also, I guess primary residence. So he pointed that out as well. Does that really change between the policies, coverages, deductibles of going primary versus a rental property? What are considerations that you would think through for a primary?
Well, I mean, like your primary residence, I think you always have to look at things in a business perspective, right? When you're trying to like lower your costs for insurance, playing with deductibles is really important, but making sure you have an emergency fund for each property, your personal property, and you have an emergency fund for your investment properties to make sure you can cover things like your deductible, right? So the difference is, personally, you just have to make sure, like typically the cost for your principal residence, the insurance cost is lower because you live there, and your care for your personal property is usually higher than someone that's renting off you, right? There's more risk when someone's renting off you. You've seen and heard a lot of nightmares with tenants. So the insurance cost is higher. So you might want to have a higher deductible when it comes to a rental property, mostly because the cost is higher when it comes to that. So with your principal residence, you're probably comfortable with $1,000 deductible, let's say, as opposed to a $5,000 or $10,000 deductible if it's an investment property. So you definitely play with the premiums a little bit with the deductible. As long as you have an emergency fund and you're ready to take on that deductible if something were to happen, and understand, okay, if a flood happens, my deductible is $5,000. That means that you're paying the first $5,000, and the rest is hopefully getting covered under the insurance. So, yeah.
Awesome. And if hopefully that answered your question, and if you have any follow-ups, feel free to drop them down, or you can follow up with Sam as well. I think I put your email down below, so someone can just shoot you an email if they have any questions. Moving on to the next one here. How does an insurance company determine the cost of a policy? And should I go with the cheapest insurance? Why or why not?
Oh my goodness. Don't just take the cheapest policy. It's like it's definitely hard lessons that a lot of people and investors have learned. It's so important to understand your coverage, and for me, it's definitely important for me to explain to my clients like what kind of coverages do you have, right? Like understanding that not all insurance policies are built the same. There's different levels of coverage in each policy. Some companies don't offer certain coverages in certain areas. Like I would take like flooding, for example. Some areas, some companies will limit the amount of coverage you can get. So you might have a quote that has water coverage on it, but it's a $10,000 limit. And they limit you because you're in a floodplain, or you're in an area where you might be more higher chance of a flood or a sewer backup happening, right? So not all companies and policies are the same. So making sure that you're understanding your levels of coverage, and what deductibles and all that. So don't always go with the cheapest policy. You might be sorry for that.
Right.
But 100% ask the questions, right? And any insurance professional should go over those coverages and make sure that the client understands them. And definitely don't go. Usually, they're cheapest for a reason. And you want to make sure that if you have an asset. And for me, I like to be around clients that that value their properties. And usually, they want to, ask those questions, right? Like, do I have proper water coverage? Do I have rental coverage? All these different things. So, if a client is going, I just want the cheapest, that's definitely for me as an insurer, like for as an insurance professional myself, that's usually a red flag, right? Like I don't usually like to approach it that way. And most people that I deal with are just like, okay, well, let me understand it, and then they make the decision on their own, right? They can go, okay, I understand that risk. Let's go with that. But if they want to do that, that's totally fine, as long as I've kind of shown them the options and explained to them what the policy entails.
Awesome. Yeah. Where's that fine balance between like over doing it with every single coverage, like minimum deductible, et cetera, versus, and that the policy is going to be insanely expensive if you just go all out and try to reduce every aspect of risk versus just
Yeah.
completely underdoing it? Like, how do you balance the two?
Yeah, I mean that's a really really good question, and I think in regards to property insurance, it's very hard to over insure something. Like if you're like like I think sometimes the water coverage can be in some areas pretty pricey sometimes, but that means there's a higher likelihood of a water issue happening, right? So how we determine, so that's a great question. Like how do we determine rates is super important to understand. And as companies get smarter with analytics and geography, using underwater lakes, and they really get smart in how they rate insurance policies. You typically, when we look at a risk, we look at, is it close to water, is it close to a sewer backup claim area, is it likelihood of fire. Sometimes in our, for our west coast friends out west, there's fire areas where it's higher cost for insurance for fire. So how we kind of predict, and we use analytics and AI now these days, and that's kind of a hot topic in our industry,
Mhm.
is we kind of know where problematic areas are, right? So, how you balance it is, okay, well, maybe I can limit the amount of coverage I have on a certain property, and I can limit my chances of something happening because I put a sump pump there, or I
Right.
have a backup sump pump, or I have a backup valve. I make sure my tenants are, speaking to me if there's any issues, right? So there's kind of definitely, sometimes some you have to make those decisions, right? Because the cost for the water coverage might be so high. So how do I mitigate that risk, right? So it's definitely, sometimes we run into those issues where we do have to self-insure sometimes. Some clients have to, and as long as they're making that decision, right? So, but sometimes you don't run into that issue, but usually it's how we run into those issues is where there's highly rated water areas, right? So, but the client can mitigate a little bit by putting sump pumps and that kind of thing.
Gotcha. Perfect.
Yeah.
Okay, so is there any policy if the tenants trash the place? This is actually common during turnover, right? Let's say that tenant stops paying rent, and then you get the eviction notice, and they absolutely destroy your unit. Is there any sort of coverage that protects that, or not really?
Yeah, that's a tough one, especially when it comes to student rentals. So we want to make sure that your tenants are getting tenant insurance. Okay,
Mhm.
so the reason why I want my clients that have investment properties to have tenant insurance is because if something happens, they burn the place down. You have someone to sue, right?
Mhm. Yeah.
So you want to make sure that your tenants that are moving in, they all have their own tenant insurance, because their liability is there, right? So you have a policy to kind of subrogate against. But for sure, I mean that's definitely an issue, and I've seen some horrific um, examples of that. So it is hard, especially when it comes to student rentals, to get coverage through that through your policy. Usually, it's something that is not available when it comes to student rentals. But if you have a general policy for for like a family, something like that, there are some times where we can offer something for them.
Awesome. Just as a heads up, guys, if you have questions, drop them in the platform. We're operating on multiple. If you see my eyes moving around, it's because I'm trying to look at every single platform and get the questions on here. Um, so if I didn't get to your question, just be a little bit patient, guys. I definitely will. Question here. Usually there's a form for insurance. It's covering your head. But it says there, usually there's a form for insurance. Sometimes you don't know the exact details, like when the electrical is replaced, plumbing, etc. How do you suggest handling that? what if the wiring is copper, but knob and tube is behind the wall? What happens if insurance, so I'm going to read it from here. What happens if, let's say there's a fire that's caused by the electrical, but obviously you couldn't see it? It's a loaded question.
No, that's, you know what? It's very, very tough to get 100% details, right? And what we do is we try our best to, get like, sometimes we'll do inspections on a property, but as long as the client's, acting in, like, there's something called utmost good faith in insurance, right? So as long as the client is being 100% truthful, the best they can, like, we have here in London, we have Century Homes, right? So sometimes in the background there is some of that, right? So what we like, as long as the client is being as truthful as they possibly can, the insurance, like, we know that it's not going to be, sometimes it's not going to be 100%, as long as the client's trying their best to be honest with us. We're not out here to to get out of a possible claim. If a client's being truthful, usually the company's gonna, like, an insurance company's gonna come out and do the best they can to pay out a claim, right? So, as long as the client is, being as honest as they possibly can, and those details are tough to get, right? But working with your realtor, working with the selling, the sellers as well, just to try to get as best as information as you possibly can. That's all we can ask, right? But I could definitely understand and empathize with that. That sometimes it is tough to get 100% accurate, but we try to, as long as you're being honest, and do your due diligence the best you can. That's all we can ask.
Awesome.
Yeah.
Perfect. Usually most of that, to your point, most of that information should be on the MLS listing for the most part. So
yeah.
to your point, as long as you're trying your best, it seems like it should be okay.
Yeah.
Can you get coverage on Airbnb and illegal self-contained units?
Yeah. So can we get coverage on Airbnb? Yes, we can. So Airbnb has become a arbitrage that really has come to light in the last, 3-4 years, right? Austin, like before, it was more like student rentals was the go-to, and now, as technology gets amped up and we're using technology and websites to connect with each other and able to make some extra cash. I think that's a big point too, is that people are looking for other ways to make some extra money to get by too, right? So Airbnb has definitely been a business that has come up to light, and 100% we offer those services. You can add it as a rider on our policies, up to 180 days. But if it's a full Airbnb, that it's rented out. We go on we do it under a commercial policy, and so definitely for us, not an issue. For illegal self-contained units, that's a tough one, right? Because a lot of the lot of the units, I think, in most cities, aren't 100%. We understand that, but I think our best approach is, we do our best to insure things properly. So if it's two units, we try to insure as best we can with our clients to make sure that it's insured as 2 units. But when it comes to the legal, I don't anyways get into the legal of it. I ask you, is it built as 2 units? Obviously, if I wouldn't be looking to insure hoardings or, a place where there's like 15 people living in a room, which is, for me here in London, I haven't run into that yet. But I know as the pressure of homes, demand goes up, we understand that there's definitely this question that's going to continue to come up, right? So we leave that to the city as best we can. And for me, I'm not a lawyer. I'm not a city employee. But I think we do the best we can to say, how many units are there, how many kitchens, how many bathrooms, insure it from a replacement standpoint. As far as legal stuff, we we don't really get into that as much.
Gotcha.
Yeah.
Awesome. So obviously, it's more prudent to stay on the legal side.
hundred
If you
percent. Yeah.
Yeah, if you get to the illegal stuff, you are going to take a little bit of a gamble for sure.
And you're gonna get a gamble. You're taking a gamble in a lot of different aspects too, right?
Right.
You want to make sure that for sure your tenants are safe, right? Like, I don't want to insure something or deal with landlords that are not doing things the right way, right? Like 100%. If you're not doing things the right way, it's gonna come up. It's gonna bite you in the butt. Shortcuts don't make for a long career, right? So we want to make sure that we stay away from the legal stuff and for units and make sure that we're doing things the right way. And it's more for public safety, right?
Right. Yeah, totally. Question here. So you mentioned commercial insurance. What exactly is commercial insurance?
Yeah. So commercial insurance. Well, I mean, it's so vague, right? Like, what is commercial insurance? So commercial insurance can really span from anything for us is 6+ units to your local convenience store, right? So commercial insurance for property, 6+ units, and if it's an Airbnb, bed and breakfast, that type of thing would be commercial. And it could span all the way to your convenience store, your contractor, that kind of thing. So we do all that type of insurance. I have amazing staff that specialize in commercial insurance, and yeah, we're really excited to kind of focus more on that side as opposed to the home insurance, personal stuff. Commercial insurance is extremely exciting, and yeah, it's there's so much. It's really broad, right? So it's really
So, like,
exciting.
actually, maybe to help you out, like, this might be a better question here. What are the types of businesses and properties that will typically require commercial insurance? So you mentioned Airbnb being one of them. Like, what
Yeah.
are what are the yeah? Like, I guess as the question states, like, what are the businesses that require it?
Yeah, so different types of property. So we'll answer that question first. So anything that is like room and board, like an Airbnb, over 180 days would go to commercial. Anything 6+ units. So 6+ units commercial for us. And so that's the for the property insurance. So apartment buildings, it's commercial. Um, and what's the typical? What types of businesses or properties typically require? So anything with like for business, anything that you're dealing with the general public, you should probably have a business policy. So even if you're a cleaner, you're a contractor, you might think that you're doing things on the weekend, but next thing you know, you're getting a lawsuit because you did something wrong. You want to make sure you have commercial insurance or business insurance.
Mm-hmm. Mm-hmm.
Yeah.
Gotcha. And similar, like if you own, let's say, a multifamily property with mixed use and there's some commercial tenants, I assume the commercial tenants also have to get their own insurance on top of you insuring the building. Is that right?
Yeah, 100%. Like if there's anybody in your building, either if it's a tenant that just lives there or it's a person that runs a business out of your property, please make sure they have tenant insurance. Like, if it's just an extra layer of protection for you, aside from having a corporation, have a conversation with a lawyer about having a corp and a hold corp, and having your tenants having insurance. It's another layer of protection for you. So,
Right.
I mean, it might be annoying. It might be one of those things that you don't want them to, it's part of being a business owner. And, believe it or not, if you're a property owner, you're in business. You have clients and your tenants are your clients. And you want to make sure that, that if they get sued, they have a policy and it's not going to you, right? So it's just another layer of protection, and also, if anything happens, if there's a fire, their contents and their stuff is insured, right?
Right.
So, if there's a fire, you want to make sure that you got rent coming in through an insurance policy. But also, if they have a fire, they have somewhere to go, and that tenant policy, should have additional living expenses to cover, their stay at a hotel, or to cover their contents if something happens. So you're doing a kind of you're not doing a disservice. You're doing a service to your tenants, or the business that's in your building, to make sure that they're okay as well.
Mhm.
Yeah.
Perfect. What factors influence the cost of commercial insurance premiums?
Yeah. So factors could include the occupancy. So let's it could be from anything from, if you have a commercial property, the occupancy, like what type of business it is in the building. If you have a commercial property, and you have, I don't know, like a kid's play place, one of those, I don't know, one of those places like Kellogg Lane or Flying Squirrel or something like that. There's a higher risk of liability, right?
Hmm.
So when in business, and in lawsuits, when there's a lawsuit, they want to sue everybody, right? So they want to sue the property owner, they want to sue the business owner, they want to sue everybody, right? So you definitely, want to make sure that, so that's something that could affect the insurance, is the occupancy, what type of occupancy it is.
Right.
Um, and other things is kind of, for commercial properties, is what type of build is it masonry, non-combustible, is it frame being the most expensive, and masonry non-combustible is usually the best price. So the type of build of the building as well is going to affect the premium.
Hmm. Gotcha. Perfect. Awesome. And is there any reason? This is just we didn't get a question on this, but I'm just thinking about like back while ago, I had insurance on a property, and sometimes and I guess the company would ask me to take photos of the front and the back of the property. What's the reason behind that?
Yeah, well, the insurance. So that's really like an underwriting uh, obligation, right? So
Hmm.
what type of shape is the building in? Is it an area where it's next to a boarded up house where there could be some concerns for arson there, or so those pictures are so valuable to us, for underwriting, to make sure that we're, because sometimes we don't, I'm not, able, or we're not inspecting it right away, right? So it's giving us a snapshot of the area. What type of shape is this building in? Is this something that I want to put my name on, and have insurance on, right? Like those are for sure. For me, I want to make sure that I'm insuring properties that aren't, slums, right? I want to make sure that they're properties that are well taken care of, that aren't in risky areas next to, you know a boarded up house, let's say, right? So
Right.
those pictures, for one, make me feel more comfortable, and they make the underwriters, it's part of an obligation of underwriting a policy, right? Just to make sure that we're insuring the right stuff.
Hmm. Hmm. Yeah, no, that totally makes sense. Nobody wants to insure. I think there was like I'm trying to remember. No, this was mortgage fraud. I remember in the U.S. or something, for appraisals, they asked for photos, and I think a client took photos of like different properties and then
Yeah.
sent it over, and
Oh
then
my god.
yeah, the properties were all in shit condition, but they were showing nicer photos. Has that been an issue ever in insurance? Like, obviously, you're shooting yourself in the foot by doing. I guess, yeah. Why would you want to do that? Because you shoot yourself in the foot. If anything happens, then you're not going to get
Yeah.
insured anyway. So, I guess it
Well,
doesn't make sense.
there's always going to be bad apples, Austin, and I think, for me, like, I want to do business with people that are, for one, I can educate, and I can kind of guide them through it. Like, for me, I'm like your guide through this insurance world, right? So for me, if I can give you education of, listen, there's different types of approaches of how to insure this thing. Maybe I can give you some pointers of how to get it to a point where you can get it insured. I'm here to guide you, right? Because exactly, you might be shooting yourself in the foot, like sending pictures of a different building. like it's just for me that's just so
That's
it's
straight up
so
fraud.
it's just it makes me sad for that person, right? Because
Right.
if they're gonna do things like that, who knows what else they've done in their lives. So for sure, I mean that's what we call a moral risk. And I think I think that's telling of that person, right? Because
Hmm.
for me, I mean, you're only affecting yourself, because if something happens and you've done that, it's just we're just not going to pay out, right? Like it's as simple as that. If there's fraud, right? So for me, it's to be a guide for you, to give you good advice, to make sure we're doing things the right way, not trying to you know do things on the sly, right? Do things right way, and that's just the way I live my life, anyways. And I want to have clients that live their lives the same way, and um, you know, and grow a portfolio that's something that you can be proud of, right? Like you don't have to worry about it. It's just way better.
Yeah, you don't want to sleep with one eye open, especially if shit hits the fan.
Absolutely, absolutely. Good way to put it, Austin.
Okay, so you do much more than property insurance. I feel like infinite banking is a concept that's come up a lot more in the investor community. Would you be able to explain what the concept behind infinite banking is, and how does it relate to whole life insurance policy? And also, what is whole life insurance policy? To really just break it down as if this is the first time someone's hearing this.
Yeah, absolutely. So thanks for asking that question. And I think as we come into a lot of higher taxation era here in Canada, I think a lot of the conversations are definitely starting to pop up about, how can I invest, and how can I, tax efficiently grow my portfolio. And I think whole life insurance and infinite banking, I guess people have been using that term a lot, is infinite banking is just pretty much a whole life policy. So there's two different types of insurance policies out there. So one of them is called term insurance, and the other is called permanent insurance. So term insurance is insurance for a set amount of time. So let's say a 10-year term, 15-year term. So it lasts until that time comes up, 10 years or 15, all the way to 30 years. Some people have it to age 75, and then it renews, or it just runs out. So the other type is called permanent whole life insurance. So when you hear infinite banking, it's whole life insurance. So there's two portions of it. So there's insurance that goes up over time, and there's cash values that the insurance company pays out dividend. So it's a participating policy. So as the dividends get paid out, the client has access to that cash, so they can access that cash through a loan, a policy loan, and they can use that money to invest in properties. They can use that money to invest in the business. So that policy is definitely an amazing way to grow your cash values tax free. Because it's within the whole life insurance policy, so that the growth on it is not taxed on the way up, and you can leverage it and access that cash through a policy loan, typically up to 90%, about 90% of whatever that cash value is. So as if you are a corporate owner and you have some retained earnings, definitely it's something to consider. And being tax efficient is definitely important, Austin, as you know. It's definitely become a topic of conversation, especially lately, because of the cost of living, and paying yourself is expensive. So being able to use a vehicle that grows tax efficient is tax efficient when you pass away, because life insurance, again, in Canada, for most cases, it's not taxed, right? So definitely having a conversation. I'm open to have a conversation with anybody if you'd like to discuss that. Definitely something, if you have a corporation that has retained earnings, having a corporate owned whole life policy is extremely important. And I can't undernote that, extremely important. It's something that if you do have retained earnings and you have a corporation, reach out, have a conversation. It might be something for you, might not be something for you.
Mhm.
There's pros and cons to everything, but definitely there's some people that should be having that conversation.
Gotcha. So just to understand better, when you purchase a whole life insurance, does that money? So you get paid dividends. That money is being invested by the insurance company, or how it? Where's the dividends coming from?
So it's based on the insurance companies, like how they've done and so pretty much every year the board of directors will have a meeting, and then they'll kind of come up with a dividend for that year, right?
Okay.
So it could be 6.5%, could be 7%, 6%. It varies from year to year. But typically, when they pay out a dividend, your cash values will grow over time, and you'll have access to that cash value and that growth within the policy. For the most part, it's tax efficient, tax free.
Gotcha. Awesome.
Yeah,
So you can
yeah,
leverage that again to reinvest into other assets, which
yeah.
is
For real estate, for
very
my real estate investors out there, um, definitely let's have a conversation if it's something that might fit you. There's a couple things that you do have to look out for. Like a part of your premiums are going towards life insurance, and you have to be insurable too, right? So there's different things that you got to look out for. It's not for everybody, but I think as we go into like if we talk about tax efficiency, I don't think there's anything like it. So I love having that conversation.
awesome. Question here, just to sort of continue off of the whole life insurance policy. What are the advantages and disadvantages of it? So I guess we
Yeah,
talked
well,
about the advantages. What are things that people should consider? Because as you mentioned, it's a great solution for a lot of people, but might not be the right solution for others. So what are some considerations?
yeah. I mean, considerations is that you're paying premiums, right? So your cash flow in your business might dry up, right?
Right.
So if your cash values haven't had the chance to grow sufficiently, then you may have to reduce your policy. You may have to, let it go at a certain point, depending on how much cash values there are. Sometimes there are downsides if for cash flow, right? So definitely, it's not for every person, but the drawbacks are that it is an investment, and so and as well, you know there's restraints, right? So sometimes it might not be until the second or the fifth year, depending on how the policy is set up.
Mm-hmm.
The cash values might not have a chance to grow, so you might not have access to that money for 3 to 5 years, depending on the setup, right? So
Right.
typically, when you're looking at an infinite or that strategy, anyways, you're looking at hopefully heavily loaded on the cash value side, and that's typically, it's usually you have to have some accessible cash to be
Right.
able to do certain approaches to it.
Awesome. So definitely, we're gonna move on from the infinite banking and the whole life policy chat. Just as a
Yeah,
heads up, guys, it's not like a straightforward conversation. It's not something that we can can probably have an entire session on that alone. So if there's any other
yeah,
questions or follow ups, you can just hit Sammy directly, and his email, Instagram is down below there.
yeah. Austin, it's really, it deserves a conversation, and sometimes we end up seeing, oh, this is something that's definitely something that you should consider, and sometimes we say, okay, listen, you're not there yet. Get a term insurance policy to cover your liabilities as you're growing your assets. You have a young family, and you have $1 million, $2 million in mortgages out there. You want to make sure that your family's okay if something happens to you, right? So the conversation might go, okay, I'm not ready for that conversation just yet. Let's get some term insurance just to cover my liabilities while I'm growing my assets, growing my portfolio, and maybe having that discussion at a later point. Sometimes it's not now, maybe later, maybe it's not ever. Every client's going to be different, but we sit down with our clients just to make sure and do a needs analysis, and we always do the right thing. That's my biggest my biggest approach to life is I always try to do the right thing, and give the best advice, and I think that's how I sleep at night, right? So that's for me has always been the right approach.
Yeah, yeah, and of course it's never too late to have that combo. It's obviously better to have it while you're younger versus older. The younger you are, the more the more beneficial it'll be. It'll be much cheaper.
Yeah, and then you can heavily put more towards the cash values, which will grow that asset that you can leverage, right? And again, like those whole life policies, the cash value on those can be used as an asset on loans too. So if you're applying for a loan, they'll ask you, do you have any cash value in your whole life policies,
Mhm.
right? So it's for me, it's something that, again, not for everybody, but it deserves a conversation.
Yeah, absolutely. Awesome. So, question over here. This is back on the property side of things. We're going to shift towards claims a little bit. No one likes to talk about claims, but the reality is that it could be something that you're going to find yourself in as a real estate investor. I know I have twice. Not great, but it happens. So, when you choose between, how do you choose when to report something versus when to just bite the bullet and do the work yourself? Sometimes like there's a little bit of a sump pump backup, and let's say it's going to cost you $2,000 to clean up versus getting insurance involved, and then maybe insurance is like, okay, this is a problem property, so next year the policy we're gonna tag on some premiums there, right? Like how do you determine it's like, oh, I'm gonna go through insurance versus I'm just gonna pay out of pocket?
100%, and that's a pretty good question because, and I'm like that's a really good question, and you went through that, and I'm sorry you went through those claims, Austin. I think it's really dependent on the situation. Cooperators, like certain companies have guarantees where you can call them, get some advice on a claim if it's worth it, without having to be actually reported as a claim on your file. So I can see the resistance of wanting to call your insurance company, but I think sometimes you got to say, okay, what's my deductible for one, right? So when you look at a claim, what's my deductible? Is it worth me putting in a claim, or can I get this mitigated myself? But usually, more often than not, it's important to, for one, if it's something that happened, it's good to call your insurance company, because if something actually comes to fruition, that it comes to become a bigger problem, and you haven't notified, you're calling them like 6 months later, they're probably not going to pay the claim. It's happened over a period of time, right? So for sure, if there's something, just make sure either you take care of it, you make that decision, you take care of it, or you call the insurance company, right? So the problem doesn't continue and get worse, right? So when you're making that decision to go, okay, how I would analyze that situation, I would say, one, what's my deductible? What is my cost to fix this? And then you can kind of make that decision based on those few things.
Gotcha. So I mean, let's use an example here. If your deductible is $1,000 and the cost to fix is like 1,500, would you even go to insurance, or would you just suggest paying out of pocket? Or is it actually like a misconception? If you go through insurance, like this is like vehicle insurance. You know what I mean? If you get into an accident, then your premium is going to go up. Even if it's something small and you report it, likely your premium is going to go up. Is it the same thing on the property side of things?
Yeah, I mean, it's definitely, like, again, every insurance company is going to be different how they look at rates. Sometimes it might be 5% increase. Sometimes it depends on what happened too. Like, is it a water issue that's continuing?
Right.
to happen. Like, sometimes an insurance company might go, listen, Austin, I love you, bro, but this is the third time you're making a water claim. We're probably gonna, either take that coverage away, or the insurance company is gonna play it by ear.
Right.
Um, and I think, if I think you got to make that decision based on your deductible. That's the way I look at it, right? If it's if it's $500, I don't know. I'm probably leaning towards, personally, I'm probably leaning towards not putting in a claim and just making sure that I take care of that issue. But just
Right.
don't let it continue, right? Take care of it, like mitigate it, take care of it so it doesn't happen again. Because if you let it go, then there could be lots of issues with, if there's mold or whatever, right? Just make sure you take care of it
Or
either way.
even if you're aware of it and you don't take care of it, like you have the responsibility to insurance to obviously ensure these problems are taken care of. Like for example, if there's a structural issue in your house and you just let it be for a year, and your house collapses, I doubt insurance is going to cover it. But like you should have taken
Yeah.
preventative
Yeah.
measures.
Exactly. Just make sure you take care of the problem. 100%.
Awesome. So we have two more questions here, guys. If there's any final questions, feel free to drop them. I'm still monitoring all the socials. Can you explain the process of filing a claim and what clients can expect during that process?
Yeah, absolutely. So when you file a claim, I would usually people have an agent or a broker. Give them a call. They usually will send you to a claims department. So each insurance company should have a claims department, and you can start to kind of give your details. For one, I would say if it's like a water claim or a fire claim, take as many pictures as you can, and if you haven't already, take an inventory of your contents in your house. Maybe get a video, go throughout your house. So we have an inventory list as well. If you're insured with me, I can send it to you. It's just a list of contents. You could write down the values and jot down some information there. But taking a quick video throughout your house to make sure that if fire happens, likelihood of you remembering stuff, it's pretty, it's pretty hard, right? So if you had a
Right.
video, send it to yourself, take an inventory list, send it to yourself, have it on a cloud somewhere, and so usually you'd call the claims department. They'll ask you what happened, and then they usually we'll ask you to try to mitigate any further losses. And send someone out to start taking care of the problem for you.
Gotcha. Are they, from what I've heard, I don't know if this is kosher to say. I don't know if you're able to answer this. But I'm going to say what's on my mind. I've heard an adjuster's role at times, if it's a big claim, is to try to minimize how much they pay out. Or not the role, but like it's almost like, I mean, there's not really any good way to say it, but yeah, I mean,
Yeah.
like,
I hear you, man. I hear you. Honestly, like it's definitely, to me, the way I look at it is we are here and we have a job and a duty to put the client back in the same position that they were, right? And unfortunately, I'm sure there's been times where, I mean, the rep comes from somewhere, right? And
right,
there's got to be a middle ground where, like, sometimes insurance companies get taken advantage of, and sometimes, it could go the other way possibly. But I think the reason I have a job is if something happens to my client, I want them to be in the same position.
right.
Okay, so for me, I take it extremely personal to make sure that happens, and definitely doing, like I said, inventory, making sure that you have adequate coverage, that you're reviewing your policies to make sure you understand it. Right. A lot of times that anger comes from maybe not reviewing it, maybe not taking the time to maybe getting the cheapest policy possibly,
Right.
and sometimes the advice hasn't come properly from the advisor as well, so it's got to be a team, right? We're both coming together to get the best policy in place that makes sense for you, and yet you both understand it. So I think a lot of that times where that becomes misconception or that happens is because, for one, maybe we don't understand. For one, like, I think it takes two to make a policy. So it takes me giving you the advice, asking the right questions, and meeting in the middle, and making sure we do something that you understand and makes sense. But I think a lot of times that does happen where either it hasn't been explained properly, or the policy wasn't set up properly at the beginning. So
Right.
making sure that you're doing your reviews and just having conversations with your people. That's my biggest thing.
Awesome. Last question here. Have you ever, this is a little bit story time. Have you ever seen someone's claim get rejected? And it could have been at the fault of their own, right? Because we talked about preventative measures. We talked about not taking the cheapest policy. Have you experienced or seen any horror stories that could have been avoided? And this is just to nail down all the points that we chatted about.
Yeah, you know what? I won't get into a particular, but let's just say, let's just kind of throw a scenario out there of an example, right? So I think an example of what could happen would be if the water coverage was too expensive, right? And or they have water coverage. Let's do it this way. If so, a client has water coverage, and water coverage in Canada is sewer backup and it's flooding. Okay, and sometimes some companies will not have sewer backup, or they won't have flooding, so there'll be one or the other, right? So if there's a, let's say if there's a claim and it came through the foundation as opposed to coming overland through a body of water piling up because of rain, or coming through the sewer back, and it comes up through the crack in the basement. Okay, this happens a lot.
Mm-hmm.
Where I have foundation issues, you might not even know you do, right? It might be behind the walls. But if that comes through and it's happened through a period of time, and it's small leak, and all of a sudden there's a big leak, right? And all of a sudden your insurance company says, listen, this has happened over time. There's a chance of that being rejected because it's been a foundation issue, a property management issue.
Right.
Maybe you didn't feel aware of it. Those are scenarios where it's a little tough for sure.
Right.
And I guess I see it from both ends. But those are circumstances where a foundation could be cracked and it's happened over a long period of time, and all of a sudden you notice it, and the insurance company says, no, we can't cover that. So those are one of the hard ones. Where a client didn't even know, right? It could be behind a wall.
Yeah, I'm on the insurance company side on that one.
Yeah,
I mean,
it's a tough one though, man. My heart goes out to people, right? Like if something like that were to happen, but it's kind of tough because if insurance companies are paying out for stuff like that, or like let's say an older roof, that's another one, right? A guy has a 22-year-old roof, and then a storm comes through and then it lifts it up, and all of a sudden they get a free roof, but it's a 22-year-old roof, right? And it's not fair that everybody else pays for that roof when it should have been replaced 15 years ago.
Right. Yeah.
So there's a lot of different circumstances. So it's we try to do our best though to make sure we give the best advice. But yeah, management of your property and making sure you're maintaining it is definitely important.
Awesome. And really appreciate you jumping on, Sammy. For those who want to contact you, your email is down there. The .ca, like the A is sort of fallen off, but your email's there. There's going to be a re-recording, so you guys can catch it on the Facebook group. It should automatically post on YouTube as well. And then I have your Instagram there as well. Is that usually the best way for people to reach out to you?
Yeah, absolutely. You can reach me there. You can reach me on my Instagram. you can inbox me. I'll give you my cell phone, and then we'll definitely chat. Looking forward to it, guys. It's just super important that you're with someone that you have trust with, and they're giving you best possible advice in this journey of investing in insurance. I definitely love my job. I have passion for it. I have a fantastic team, and yeah, it's something about this career. I don't know how I fell into it, but I love it. I really truly do, and I do my best to help my clients. And if you do have any questions, just let me know. We've been dealing a lot with apartment buildings, builders risk. We could probably do a whole episode on builders risk and investing and vacant land. There's so much stuff to talk
There's
about.
fun. Yeah.
Yeah, give me a shout. We'll look forward to connecting.
Awesome. Sammy, really appreciate you jumping on, man. And guys, hope you guys enjoyed. Thanks so much for tuning in. And again, we're going to be hosting this monthly. So if you have any ideas on what topic you want to touch on next, feel free to just message on the Rise group. Again, appreciate you all tuning in, and have a good night, everyone.
Have a great night, everyone.